Hello everyone, I'm Shivani and today we are going to learn about a new topic that is the golden rules of accounting. These rules form the heart of accountancy, without which it is not possible to maintain the books of accounts. Now, what is accountancy? Suppose my mother gave me 100 rupees today in order to spend it throughout the day. I spent rupees 50 and came back home. When my mother will ask me about the balance which is remaining with me, how will I determine it? This is accounting. Here I talked about a number which was in hundreds, but the business firms maintain the books of accounts for transactions which are not in tens or hundreds, but rather in lakhs and crores. So, in this video, we are going to talk about the golden rules of accountancy on the basis of the traditional classification of accounts. In part 2, we will be talking about the rules pertaining to the modern classification of accounts. So, without further ado, let's get started. Okay, so what are the golden rules of accountancy? They are a set of guidelines that help us in recording the financial transactions of the business in a systematic manner. Now, these rules pertain to the double entry system, that is a dual entry system, that is the debit and credit entries. Every transaction has two aspects, debit and credit, and these rules help us in determining which account to credit and which one to debit. So it becomes easier for us to determine the entries, the journal entries, furthermore posting them in the ledger account and so on. So now we are going to learn about the rules of accountancy based on the traditional classification of accounts initially. So what is a nominal account? This is the first type of account and is very important to the functioning of a business. So all the profits, all the losses, all the expenses and the incomes are treated as nominal accounts. You must remember that these nominal accounts appear in the trading account and the profit and loss account. You will not see them in the balance sheet, although the net profit or net loss, which is a result of the PL account, that is a profit and loss account, appears in the balance sheet on the liability side. Why? Because the net profit is added to the capital or the net loss is subtracted from the capital. Now, observe one thing. It's written that it resets to zero and starts afresh when the next fiscal year begins. This means this means that net profit, for instance, let us take net profit, which is added to the capital and hence the balance is closed because the capital is carried forward to the next year. It will again appear in the balance sheet, but the net profit or the net loss are reset to zero after each fiscal year. So, what are the examples of a nominal account? Commission received, which is an income. Commission paid, which is an expense. Salaries account, rent account, interest account, wages account. All these are nominal accounts. This is a very important rule which pertains to the nominal account. Please remember one thing, do not mix the rules of nominal account with those of real account or personal account because the rules for each of them are very different from each other. So, in case of nominal account, whenever you see an expense or a loss, you will always debit that account. And whenever you see an income or a gain, you will credit that account. For instance, let us understand with the help of an example. Here, if the question says salary paid to the employees by cash, what is to be done is that since salary is an expense incurred to keep the business running, you will debit the salary account. And since cash is going, salary is being given, so the cash is going. So cash account will be credited, salaries account will be debited. Remember one thing, that if one account is getting debited, the other will always get credited. So the salaries account is getting debited and the cash account is getting credited. Now, let us understand income. If I say rent received, what is it? It is an income. Since it is an income, cash is coming in. So cash will be debited. But, that we learn later. But understand this. Rent received is an income. So rent received will be credited. The corresponding account is cash account. So it will be debited. I hope it's clear to you. The narration being salary paid for the month of October by cash. It explains the transaction. Now, let us understand the real account, which pertains to the assets of the company. What is an asset? An asset is anything which helps in the running of the business. They are the possession of the business. Now, these assets can be tangible as well as intangible. It's not that just the machinery is, is an asset just because it's tangible. Even patents, copyrights, and goodwill are assets, but they are classified under the head of intangible assets. What is a goodwill? What is goodwill? Goodwill is the reputation of the firm. Marketing aims to build the reputation of the firm over time. Amul brand has a goodwill, just as Vita brand has a goodwill. So these also have some value, and hence these are assets of the company. Now we learned that nominal account resets to zero after every financial year. But a real account does not close when a financial year completes. Rather, it is carried forward to the next fiscal year. Okay, so it is carried forward. Now we learn about the principle which governs this account. Now, the rule that governs this account: debit what comes in, credit what goes out. So, basically, if I purchased a machinery, the machinery is coming inside the business, cash is going out of the business. Basically, machinery is a real account, so it will be debited because it's written debit what comes in. On the other hand, if I sell a machinery, a fixed asset, then cash is coming in and machinery is going out. What is going out? Machinery, which pertains to a real account, to the real account. So machinery account will get credited in that case, and cash account will get debited in that case. Okay. Now let us come to personal accounts. Now this requires some elaboration. First of all, what is a personal account? It relates to people, associations, companies. Okay. Now, capital account. Capital account, which represents the funds of the owner, is a personal account. Drawings account, that is the cash withdrawn from the business, is also a personal account. Bank account, that is the cash that is put in the bank, is also a personal account. Now, what are outstanding salaries? If we look into that, outstanding salaries are the salaries which are yet to be paid. On the other hand, if we take into consideration prepaid rent, then prepaid rent is the rent that we have already paid in advance. Outstanding salaries are shown as a liability in the balance sheet. Prepaid rent, that is, you have paid it in advance. So it wasn't supposed to be paid, but you have paid it in advance. So you will show it in the assets of the uh, company, that is in the balance sheet. Okay. Now, if we look into the account of accrued interest, what is accrued interest? That is, you will get it, you haven't got it, right? You are supposed to get it, but you haven't got it yet. that will also be shown as an asset in the balance sheet. Now we will understand the types of personal account, which will make it clear in your mind the difference between prepaid rent, the different and drawings account, the difference between prepaid rent and outstanding salaries. So let us see that. So what is a natural personal account? A natural personal account pertains to an individual, natural human being. So capital account pertains to the funds of the owner, and hence it's a natural personal account. Creditors, debtors, they all are natural personal accounts. This is pretty easy to understand, but now we come to artificial personal account. Now, we often say regarding a company that a company is a separate legal entity from its owner. You must have studied it in class 9 if you had taken up commercial studies as your main subject. So, a company and its owner are separate entities. Now, this was recognized in the famous case of Salomon versus Salomon and Company Limited. If you have heard of it, it is a very famous case. So, just see that actually the the company is not a natural human being, but according to law, they are artificial human beings, and hence it's a personal account. As the name suggests, artificial personal account. For instance, Agarwal Stationery's account, Wayanad Containers account, and so on. Now, the representative personal account. This represents a particular group of persons. It represents a person or a particular group of persons. Okay, so they belong to the previous or the coming year. How? See this. Understand it very carefully. That is outstanding salaries. If we take into consideration outstanding salaries, you will see that this account does not, explicitly state the name of one person. Rather, it is a representation of a group of persons. In this case, the employees of the business firm. So, outstanding salaries is an example of representative personal account. Here it's written that it is on it represents the employee's due salary. Again, if we say that prepaid rent, okay, prepaid rent represents the account of the landlord whom we have paid in advance. So it is represented it is representing a group of persons, and therefore it is known as a representative personal account. Now, having said that, let's come to the main part, the rule which governs this account. Now, this rule is pretty easy to understand. Here you can see there are two entities. Try to understand this. Two entities: purchases account and Kajal's account. Kajal is a person, okay? So you can say that Kajal's account is a personal account. Fine. Now, purchases account is getting debited and Kajal's account is getting credited. Why? Because Kajal is the giver here. So this is a briefing of whatever we have studied till now, and now next we'll be meeting in part 2 of this video. So thank you for watching and see you in part 2.